Hello, everyone. Welcome back to the Entrepreneur Investor Connection. My name is Miguel Sanchez. I'm your host, and I help entrepreneurs and investors create and fund the future by investing in innovation. So, today I'm going to talk about just this overall state of the market. Like, this cool stuff happening, like Bitcoin was above 40K again. And there's messed up things happening, like the stock market is down. But let's discuss what's going on. Let's talk about what we think is happening. Let's talk about what we think will happen going forward, and we'll see where this takes us. So the first thing I get to, of course, is Bitcoin's up to 40K. Was up to 40K. I don't know where it is right this second. I'll look, but Bitcoin is 39,500 and $85. So that's positive, right? There's good stuff happening with Bitcoin. Is going up, but again, when I look at the charts, and actually, you know what? I'm going to show you the charts that I look at and how I really think about this. So when I go, I'm going to share my screen. All right. So when you look at the charts, right? Bitcoin was at $63,000 here. This was on April 13th. May, June, July. About 3 months later, we're at 39. Oh, it went up a little more. 39.5, right? So what's the difference? Why is it going up and down? So what's happening is a lot of people think, these are the few theories. One is many people got into Bitcoin last year when it was about, I think it was like 7K. And this now makes a full year that they owned it. So now they pay less tax by selling it. So they think a lot of people have been selling it and paying taxes and stuff like that. Also, there's a lot of good news that's been coming out, right? So a lot of what happens here is people, like when they see it going up, they want to buy more of it as it's going up. So I believe right now that's what we're seeing. But what I see in this chart, though, is if you look, this is MACD. I spoke about MACD a few times. It's the moving average cost convergence divergence. It basically means people are buying and selling it, and you can see the volume grow when they're selling and when they're buying. So what I like to do is when people are selling, that's when I'm buying. When people are buying, that's when I'm selling, right? So right now I've been selling because it's high. It's higher up than it's been. And what that does for me personally is, let's say I had, okay, I'll show you literally right here. Let's say I was buying when it was 29,500. Let's say I bought one full Bitcoin when it was 29,500. And then I just sold it when it was 39,500. I would have basically made 10 grand, right? But if you do the opposite, which is what most people do, they buy it when it's high and they sell it when it's low, you will lose $10,000, right? So basically what I look at is I say, okay, what is everybody going to do? And what do I think they're going to do? And right now, if you look at the chart, all the time it goes dark green, then light green, then it goes to red. Sometimes it goes right back up to dark green, which is good. That means it's like going down and then people start buying it again. Going down, people start buying it again. But and I'm streaming live on YouTube. If you want to see it, the link is in the bio. I'm showing how to view the charts. So right now, if you look, a lot of times when it's dark green, it goes to dark red for longer than the dark green, right? Especially now. But even in this big bull run, this is when there was a lot more green than red, right? But it came from some red. Then it got to green, and here, same thing. It's usually similar to however much red is however much green, except when it comes to the reds, right? So if you look here, a little bit of green, a lot of red. Here, I guess there's a lot of green, a little bit of red. So right here, we've been through a pretty good time. of people wanting to buy it and buying it, but the price is not going up that much, right? So here again, a lot of green, not that much red. So this was one of the ones where I saw just a lot of good, solid, dark green in a row, and then the price number is pretty high. So if I look and I'm like, you know, what do I think is going to happen? The last time I saw this much dark green, it went to dark red. So I think we may end up going back down. So that's why I'm selling Bitcoin right now, waiting for it to go back down and then buy more, right? That's what you do. And when you look at stocks, right? So we talked about, let's search up, actually, Jason, let's talk to Jason about stocks. Jason is a Meta Bronx student that we got. Hey, Jason, how are you, man?
Hey, Miguel.
All right, so
Hi,
what are
everyone.
you thinking about the stock market? I just told you what's going on in the crypto market. So because of Bitcoin brings everything up and down with it, right? So when Bitcoin is up, everything is up. When Bitcoin is down, everything is down. So it kind of goes like this. And actually, I can show you in the chart, right? So whenever Bitcoin is doing well, what ends up happening right after is, all right, so let's look here. This is April 13th, right? And then let's look at Ethereum on April 13th. Okay, so remember, Bitcoin was doing good, so does Ethereum, right? Ethereum goes up a few days later, it goes up to its all-time, well, one of the good highs, right? But not its all-time high. So if we look at Bitcoin's all-time high, like I said, it was on April 13th. But then if we look at Ethereum's all-time high, it was in May 11th. So it's a little bit of a delay from when Bitcoin goes up to the other ones go up. So right now, Bitcoin is going up. So that usually means the other ones will go up. But if Bitcoin goes down, the other ones will go down. So like if you time it and you look at the order, follow Bitcoin in crypto at least, right? And Jason was telling me yesterday about doing the same thing with stock with what was it? SPY, was it, Jason?
Yeah, with SPY.
The
Basically,
SPY, I
when
believe it was SPY. Um yeah, I believe it was SPY.
yeah, it was SPY.
So all my Meta Bronxers definitely give me the X. Dude, I'm trying to be patient, but this whole portfolio is ugly right now. So, George, if you look at where you started, right? A lot of people got in when it was in the highs because, again, what I just said, people end up getting wrapped up in the rises. But what you should be doing is buying in the falls. Okay, but how do you do that? Most people are like, how do you know that? How do you know if it's falling? And that's where this MACD thing, I've been testing it for a few months. And you literally can see it. It's not even like you have to guess. You can literally see it. So again, I'm going to show you guys how I do it, how I'm doing it right now. And actually, I'm going to go full screen and see if it gets bigger. Okay, cool. So right now, today, let's look at today. Ethereum has dark green 1, 2, 3, 4, 5, 6, 7 days in a row. When was the last time that happened? 1, 2, 3, 4, 5, 6, 7 days in a row. Then it got to its all-time high. Okay, we're nowhere near the all-time high, but we got 7 days in a row, 6, 7 days in a row. And it's still not going that high. That means some lows are going to come. That's how I see it, right? Again, nobody can predict this stuff. This is all like what we think is going to happen. Even the top people in the world can't predict this. So what I believe is going to happen is that it's going to go lower. Again, I hope it doesn't, but that's what I think is going to happen. And if I look at stocks, this is S&P 500. Okay, so this is also going by day, right? You could go by minute, by month, by week. By day, it's been going up and up and up, right? So It generally does that though. If you look back, right? Just right here, what's happening here? March 23rd last year. What happened then? COVID. But still, since COVID, if you'd have bought in, look at how it rised, right? So again, COVID, there's some fears that COVID is the numbers are growing. I saw something today that New York might shut down again, right? So if that happens, you can see it going down again. I don't think it'll go down this much. I think the world is a little bit more comfortable with COVID, maybe too comfortable with COVID. So I think what's going to happen is people are going to start going outside again, getting work done. I went in waves. I made money, but this last run is the fail. See, but again, when did you buy? You probably bought at the highs, right? Which it was hard not to buy in highs, right? Because if you bought anytime, again, I'm going to go to Bitcoin. If you bought any time within February to May, end of May, you bought at the highest time. So everything went down, right? If you bought even in January, you were okay. If you were buying from last year, you're really good, right? Because you started here at 10,000 and now it's 30, you're good. But again, we gotta zoom out and look at the history, right? Last time there was a pump like this, it was 20,000 and then it went back down to like 6, 7, and it hovered at 6,000 for a while, went down to 3,000 for a while, 4,000 for a while. Then it came back. If that same thing happens again, it usually comes back to the lowest time of that pump, right? So it came back down to the 3. So in this pump, it's like 18,000. That's what people believe. Like it'll go down under 20K again. Who knows? Nobody knows. But I'm preparing for that. Either way, I'll be in a good position, right? If I have money ready to buy it when it's 20K, I'll be good. If it keeps going up, then I'll just buy a little bit more every now and then until it comes down again and buy more then, right? The real key is don't try to get rich. Don't try to put $10,000, $1,000 thinking you're going to go to $5,000. Just have a plan, a long-term plan with all your asset classes, And, what I really want to do is have people understand all the asset class options, right? So, okay, so you bought before it hit 30 to the mid 50s. So, yeah, I mean, trust me, I know people that were buying in the 60s because they thought it was going to go to 100. They feel terrible right now. So, but again, if you look at the long term, right? Like, let's go back to the chart. Let's go back to the videotape. If you look at the overall, if you would have bought even at the height of the last one, right, which was 19,400, and you look at your stuff right now at the low of now, you still would have made a lot of money, right? A high percent, not double, but close to double, right? Because it was 19 and this morning was 40K. So you still would have made double. But okay, what's today's date? This was December of 2017. Today is 2021. So we're talking about 4 years ago. They say there's never been somebody that's held Bitcoin for 4 years that has lost money, right? So again, what was the plan, right? Like if you were putting Bitcoin to take it out within 1 year and make a lot of money, that's not that realistic unless you timed it perfectly. The real truth is, with most investments, you want to look in a time horizon probably longer than 5 years, right? Like I like to start people off with real estate. Let's talk about real estate. If you buy a real estate property today, are you really thinking that in 5 years you're going to make money on that real estate? It's really rare. Really, really rare, right? Like, so let's say, and I'll give you an example by me. I'm going to give you an example based on the stuff I did in Dominican Republic. Let's say all in, I spent 100K on that property. That means to make all of my money back and make money in 5 years, I would have to average, let's say 25K a year. 25K a year, 5 years makes me 125. So I only make 25,000 in 5 years if I make 25,000 a year. Okay. How much per month is $25,000? 25 divided by 12 is $2,000 a month. Right now, my property does not make me $2,000 a month yet. So it's going to take me more than 5 years. And I knew that. I thought 7 to 10 years we'll make the money back and we'll be profiting, right? Why are other asset classes different? Like crypto, I believe, has created this false thought that, you're going to get rich quick. You're not going to get rich quick. If you hold crypto for 10 years, on average, it has gone up 200% a year. If you think about it in that term, you're good. You're good. Whatever you got right now, you're going to have more of it in 10 years. The thing is, if you need it, this is one thing. Somebody told me this. Yeah, but I put money in there that I needed. And I thought it would go up and it went down. That's not the right way to invest. If you need the money and you believe you're going to need the money, you shouldn't be investing, especially not in asset classes that are as volatile as cryptocurrency, right? So one way of doing that, if you have money that you want to be in the crypto world, not be subject to the ups and downs, what you can do is something called yield farming. If you don't know what that is, that's the process of putting what's called stable coins. And I could literally show you. I'm going to show you what I mean by that, and maybe do it. I'll do some of it right here live. All right, so I'm going to go back to the video, and I'm going to go to my crypto wallet for my crackingcrypto.club class. So let's go here. Crackingcrypto.club. If you are interested in learning more about this crypto world, definitely sign up for our crackingcrypto.club. All right, so this is the wallet for that. So what I'm going to do now is I'm going to go into. All right, so this is the wallet. This is the wallet of the class. I have $1,000 in this wallet, and I planned on tomorrow, because tomorrow's the next time we meet, starting to show people how to safely start growing their money without being in the ups and downs of the crypto market, right? So one easy way is you go to Aave.com. I am also on I'm on the Matic network. Actually, I got to put it on the Matic network. And again, how you do all that, you go over that. I think I've made videos here to show you that too. I'm not sure which video exactly. I'll find it eventually and link to it. But on the Matic network, you pay a lot less gas fees. So you want to be on the Matic network to do this stuff. So, okay, let's say my dashboard, I'm going to deposit. Let's say I want to deposit $500 max. They're going to give me, and you see it cost me 0.00096 Matic to make this transaction. If you've messed around in the matrix and you tried to do stuff in Ethereum, you know that price is incredible. Right now, I just did something in Ethereum. It cost me $5 to literally change something on one of my domain names. So when you look at the difference, that's a big one. So what you can do is there's sites like Aave.com. You can just put your money there and get interest. That's it. You could. There's other websites like Curve.finance. I'll show you that one too. So Curve.finance. Okay, I'm on the Matic network, so I'm actually gonna go to the Polygon version of this. Polygon Curve.finance. So Polygon and Matic are the same company, but they don't have the same benefits of each. Ethereum has a lot more options, but it costs money. It costs a lot more money. Polygon has less options, but it costs a lot less money. Okay, so look, right now, if you put your money in here, you'll get 3.8% of whatever you put in. And then they give you extra reward of 2.21% of Curve, 4.18% of Matic. So when you add all that up, all right, let's just add up in numbers. That's over 10% interest on your money. You aren't exposed to any volatile asset there either. These are all stable coins. So if you put $100 in, it's going to be $100. The one drawback of doing this, though, is there are fees, right? So when you do this, they charge you a fee to upload, which see how it says max slippage. There's 0.5, 1, and you can put whatever you want to test, and they'll try it, and it'll either pass or fail. But like I think if you press 0.5, most times it goes through. That's what I do. So there's a 0.5% fee to put your money in. So let's say you put in $1,000, they're gonna take $50, right? And then when you want to take the money out, there's a 3% fee. So let's say you wanted to take out 1,000, they're gonna charge you another $30. So that's $80 you've lost by putting your money in here, right? So how do you get that $80 back? Is you got to keep the money in long enough so that 10% pays you the $80. So that could be about, if you think about it, it's like probably 8 months. You got to keep the money in to see your $80 back. So this is where you want to like do this math. You just don't want to jump into this stuff. And me playing around with the class, I've lost money doing it because I take money in and out just to show people how it's done and have the videos that they can watch later so they can do it themselves if they really want to do it. But if you put money in here long enough, it's much better than any bank. Much better. But if you're only putting it for a month here, month there, you're probably losing money, even on the Polygon network. It's much worse on the Ethereum network, and I'll show you that too. So, all right, this is still going. But when this is done, I will have $500 or $501 on Aave giving me interest, and I'll show you what that interest is too. Okay, so let's see. Is there any questions from anybody of any market, stock, crypto, real estate? I want to get just a Q&A going. All right, so let's look to see if there's any questions. No questions yet. Jason, you got any questions, any comments? I know you were talking about the stock market and why you see today as an important day. You want to talk about that?
Hey, yeah, sure.
Oh, I didn't launch the Clubhouse. Nice. Let me launch Clubhouse, see if anybody wants to talk on Clubhouse. Anybody on IG, any questions? All right, while you guys are thinking of your questions, let's see what's going on. Oh, another big thing is staking. So let me show you. Actually, this is a coin that I've been buying, and I have both these tokens, QuickSwap and TEL. So look, if you go in here, it says, well, actually, you should do it on QuickSwap. All right, so let's go to pools or rewards. So if we go to TEL, we search TEL. All right, stalled out. All right, so here they're giving away 1.5 million free TEL a week and 97 Quick a week. Quick is worth right now $327, right? So if you put your Quick and TEL in here, you will get. All right, this side is not working out that well. All right, so let's see if you can see it better here. Pool analytics. All right, this is where you can see it. So what happens here is this shows you how much per day people are making on fees, right? So yesterday, 24 hours, $750 of fees were paid out to the people who had their money in this pool. There's pros and cons to doing this, though. The pro is you make cash flow. So by staking your coins on TelX, which what I'm doing, I'm getting cash flow. But I'm getting that cash flow in Telcoin and QuickSwap coin, not in cash. So if Telcoin and QuickSwap coin go down, I make less. They go up, I make more, right? So you wanna understand the pros and cons. There's another big pro and con to doing this though. It's called impermanent loss. So I'll try to explain this to you guys because I'm still really trying to figure it out myself. But basically, what impermanent loss means is, let's say I buy $100 of Tel and I buy $100 of Quick, and then I combine that and I put that in the liquidity pool, like I just showed you. Then every day they're gonna give me free coins because I did that. But what happens if Tel changes price, right? Like let's say Tel goes down in value. So that's been happening, right? These assets are going up and down. But if Tel goes down in value, let's say more people were buying Tel. QuickSwap, the coin of QuickSwap, I will have more of because when they're trading the coins, if they give me QuickSwap coin for Tel coin, then there's more QuickSwap coins. So whichever coin you have more of when you try to pull it out is how much money you're going to have. So if the opposite coin that's not worth as much is the one more in demand, you end up losing money, right? But the idea, just like with the like I told you, over time you want to make sure that the fees outweigh the gain or loss. I mean the loss, right? So in this, if the gain over time is better through them giving me the free coins, then it's okay. Even if I lost a little bit of money, let's say I did that 100 for 100 and I lost $20, but I made 100 in the free coins, then it's okay to do that. I know it's confusing and it's super early for all this. So even me, I play around with it just to learn. I'm not really worried about making the most amount of money right now. This is the first year that a lot of this stuff is possible. So I don't care if I lose a little bit of money here and there. I just want to understand it. So that's where I literally hope a lot of you are just playing around with it. I know not everybody can lose money, but it's like tuition, right? Like if you pay to go to college, it's because you expect to get knowledge out of that school that will make you more money later, right? So I look at it the same way with crypto. We're in this crazy time where all of this is brand new, and the people that understand it first are going to be in a great position. So I look at it like that. Right now, Bitcoin is up. But again, I showed the chart. I believe it's going to come back down. I could be wrong, but I think it's going to come back down, and then there's going to be an opportunity to buy more, right? So right now, you never want to buy when it's at the height, right? When you see things higher than it's been in a long time, it's more likely than not to come back down. So wait. That's why it's like the patient are the ones that get rewarded by all of this stuff. So any questions from anybody on IG, YouTube, Facebook, Twitter, wherever you are? If not, I'm going to keep talking about what I see as opportunities, right? So right now, the stock market is down as well. So like if I was going to be putting money into something today, I would more likely be putting into the stock market than the crypto market. Like I said, right now in the crypto market, depending on your personal strategy, I'm selling crypto right now because things are high. So I'm selling some of it, waiting for it to come back down to buy more. Yes, I do have to pay taxes when I do that. So that's not everybody should be doing that. Also, I got in on crypto when things were a lot less. So right now I haven't lost money, right? If you bought here and then it's here and you sell here, you lost money, right? So it depends on where you got in and your horizon, right? How long you want to stay in, how much money you want to try to make. All that stuff is really dependent on your personal finance strategy. So with real estate, my property in Dominican Republic, it's been doing well. It's rented for a while. So me and my dad, who is my partner on that property, we've been talking about making the property more valuable, if you say. So like, one, it gets rented for more, and one, the value of the property grows, right? So how do you do that? You have to upgrade things inside, right? So one way you do that makes the property more valuable is redoing the kitchen. So in this property, the kitchen and the living room are kind of together. So we've been talking about redoing the kitchen, because we redo the kitchen, then the property value goes up and we could charge more per night. But again, it's going to cost money to do that. So you got to weigh the options. And we're looking at COVID, and we're like, if COVID hits again, maybe travel comes down, we'll use that as a time to fix the kitchen. And then when COVID is not as bad and people are traveling again, if that happens, the value of that property is worth more. The nightly we could charge more, and then we can get our return on investment faster, right? So that's a thing I'm looking at right now, because again, you got to look at what's going on. COVID numbers rising. If they start shutting things down again, this Delta thing is pretty bad, and still a lot of people not vaccinated. So if numbers of deaths start going up a lot again, they're probably going to shut things down. I just saw they said August 1st they may shut down New York again because the numbers are growing and not enough people vaccinated. So when you think about all that, how does that affect all markets, right? If that happens, it's going to affect the real estate market for travel real estate, which is the one I like doing. So I'm making a plan that if that happens, how can we benefit from that while it's happening? For the real estate market, again, things are coming down. Could they go further down? Who knows? That's why they say you want a dollar cost average into things, so you don't like throw all your money in and then things going worse and down, down, down. So you put a little bit at a time, so you ride the waves, right? For crypto, again, my crypto strategy is to grow my assets as big as possible so I can borrow off of them and live my life off of them. Why is that? Because retirement comes when your assets pay for your lifestyle. So let's run the numbers. Let's say my life costs $5,000 a month. Let's just make math easy. $5,000 a month, my assets to live the life I want to live, my car, house, paying my kids, taking my kids to places, eating food. Let's say that costs $5,000. That means I need to come home with $60,000 a year. 5 times 12, 60,000. So, okay, what if now you divide that by 3 asset classes? We got real estate, stock, and crypto. So now I just need each one of those to pay me out $20K a year, right? Spoke about the real estate. $20K a year, divide that by 12. How much is that? 20,000 divided by 12. That's $1,666 a month. My Airbnb right now does make about that, but then there's expenses. So I don't come back with that. So not there yet, but getting there, right? I created one asset class that's getting me closer to that 20K each, if that's my number, right? Which it's not. So, okay. Then stock. How do you get stock cash flow? This is where you do dividend stocks, right? So if you do dividend stocks every quarter, and we saw that yesterday, I showed you literally live on Robinhood, which is my least used stock account, how I made some dividends and then I reinvested that dividends. If I wanted to, I could take that dividends and live off of it, right? So eventually, if I have enough stock to pay me $20K a year or $1,600 a month, now I'm further closer to that retirement, right? If I'm at 60 and asset class on real estate is 20, asset class on stock is 20, asset class on crypto is 20, then I no longer need to work, right? That's the goal, right? So that's my personal finance goal, is to get different asset classes to pay me a certain amount a year, and then I don't have to work on anything I don't want to work on. But my asset classes are not just real estate, stock, crypto. I also do entrepreneurship, right? Like I have mass ideation. I have a few other startups that I'm working on. Those things also, my goal is for them to pay me to make that number. But I don't need one of them to pay me all of it, right? That's where people that just have a job, you're relying on one revenue stream to help you get to retirement. That is pretty scary, right? Like, and look what happened with COVID. A lot of people lost their jobs. What if right now you're in a job that you don't even know is about to be automated, right? So you want to have, this is why I say everybody's an entrepreneur, everybody's an investor. All right. Do you only have dividends from certain stocks? How do you know which ones to do? Good question. So with dividends and stocks, the way you need to do it is there's I forget the name of it because I'm not that heavy into stocks yet. But the way you do that with stock is there's a dividend. They show you how much per year per stock they'll give you on the dividends, right? So for instance, I looked up IBM. Let's see IBM's. I'm going to share my screen and show you guys. And if anybody knows this more than me, feel free to come up and talk. All right, so IBM dividend. I believe IBM has one of the highest dividends. Okay, so here we are. Here, yield. Okay, so yield. So right now it says 6%, 6.5% for IBM on dividends. So again, let's reverse the math. If I wanted to make 20K, how much stock would I need to own? A lot, right? So let's try to do that math. If I wanted to make 20K a year just off IBM stock, 6%. So 20K. What's oh, actually I have an app download. Let me do this. Okay. Anybody with other questions? Ask your question while I do this math. Percent. So there's an app called Percent Difference, and it will tell you that. So 20,000, and let's say I'm gonna guess 150. No, actually, whoa, 1.5 million. Hold on. All right. Nope. Okay. All right. I may need to get back to you on the way to do this math. I don't want to do this wrong. But basically, what you have to do is you reverse the math. Does Robinhood indicate which do dividends? That's a good question, actually. But what you should do is when you're doing your own research, you shouldn't just look in Robinhood and just buy. You should do more research. You should have like your own research plan. I'll tell you my research plan. When I'm thinking about a company to invest, a coin to invest, a real estate property, I say, okay, one, why am I thinking about this property, coin? What? It's not just because everybody else is doing it. I got to say, okay, give me a reason that's not everybody else is doing it. Okay. So if I look at the real estate, I did start out because there was investors that were doing it. But I did say, okay, if I had to take away what they said, do I believe people are going to travel to Dominican Republic? Yes, people do it all the time. This property was 2 hours away from the airport, though. Okay, so I did say Robinhood. So I don't know. I'm looking right now. This property was 2 hours away from the airport. So I had to say, do I really believe people are going to drive 2 hours away from the airport to go to this property? I didn't think so. In the beginning, I didn't think so. I said, I don't know. I don't think people are going to do that. So I didn't really look at the properties everybody else bought because they knew people would drive. And then when I saw that all of them were getting rentals, that means people are driving the 2 hours. Then there was a new thing that came up. They were going to open an airport that was like 30 minutes away. That's when I was like, okay, this is a good deal. Let's do it. Stock, IBM. The reason why I bought IBM is because I wanted to start getting into dividend stocks. And I said, okay, let me look at all the dividend stocks, what percentages they give. Robinhood does indicate stocks which yield dividends. Thank you. So I was looking, but I mean, I'm going live at the same time, so it's really hard to do all of that. But yeah, I see it in here. But again, I don't really search them here. I search them on the internet. Then when I'm ready to buy, I buy them there. So I saw IBM had a high dividend per year compared to other ones. So I was like, all right, that's good. But I also said, why would I buy IBM long term though? I'm not, because if you're buying, you can't buy for 1 year, less than 1 year. So I'm like, okay, long term, what do I think is going to happen with IBM? So I knew IBM had a massive lead with AI because of Watson. IBM Watson is one of the first AIs ever created. They had like a 30-year lead on most companies with AI. So I said, okay, that's a good reason because AI is the future, I believe, right? So then I said, okay, what else? They just bought Linux. Linux is the backbone of your phone, your computer, most servers. IBM bought that, plus they own the oldest AI. I said they're in a good position to do well in the future. Of course, I have to stack a lot of IBM for it to pay me 20K a year, though, right? And of course, you just don't do that with one stock. Maybe you do a few. That's where like SPY, which is the S&P 500. I said a few of them yesterday. It was VOO and VTI. Those are supposed to be good stocks that basically represent the entire stock market and they give you dividends, right? So if you want to be safe, those are the safe ones. IBM is not as safe as SPY and VOO and VTI. And then if you look at crypto, so I told you my current strategy on real estate. My plan is to get enough real estate where it's 20K a year, and then where I get enough stock dividends for it's 20K a year, and now crypto. What's cool about crypto is you don't need to have crypto that pays you out 20K a year. You can have enough crypto where you can borrow 20K a year from yourself, pay yourself back over time. So that's my goal on crypto. Of course, at the same time, I'm trying to grow things like I just showed you with Tel, where they give me cash flow, but I'm trying to get my assets up enough where I can borrow 20K every year and not worry. Because like I told you, every year on average, crypto grows about 200%. So if you have enough assets, if you're borrowing 20K, let's do math again. Let's say you have 100K in crypto assets and you borrow 20K. And then the next year grows 200%. Now you have 200,000 and you owe 20K, but you take out another 20K. Now you owe 40K, but you have 200,000. So over time, then the next year goes to 400,000 and you got 60,000 now. Over time, which is the current plan and strategy, you should outpace the Coca-Cola pays dividends every quarter. Yeah, all of these do, actually, most of them. Well, not all of them, actually. Most don't. Like Amazon doesn't give you dividends. Apple does give you dividends. Microsoft gives you dividends. Tesla doesn't give you dividends. It depends on what stocks, because there's growth stocks and dividend stocks. Growth stocks mean they're still reinvesting in the company, right? So Amazon, the reason Amazon is a $2 trillion company is because every time they make money, they reinvest it and they come up with new crazy things that end up making them more valuable, right? So the trade-off is it better to innovate and grow the value of your stock, or is it better to pay out your shareholders as dividends? So Amazon took a route of make it more valuable so the stock grows in value more. And if you want to sell it, you sell it. But they say if you would have gave Amazon $1,000, I think 10 years ago or 20 years ago, probably 20 years ago, you have $1 million right now. from 1,000. So I don't know how many dividend stocks you're going to be able to put $1,000 in, and in 20 years have $1 million. So there's that, give and take. That's why, like, I invested first in Tesla, because I saw Tesla as not a car company. I saw them as an AI company, a data company for driving, right? So QQQ is a good ETF. There you go. QQQ. Look that one up. I don't even know what that is. Jason, if you know what that is, jump on the stream and tell us. Or if you want to explain it, I don't know how to say your name on IG Live. Thank you. QQQ. Actually, I'm going to write that down right now and look it up. QQQ. See, even I learn on the lives too. We're learning together. But basically, you got to come up with your own personal strategy. So again, I just told you my personal strategy. If every asset class can give me 20K a year, I'll be good. Let's think of the asset classes that I currently do. Real estate, vacation real estate. People do residential real estate too. You can do all kinds of different real estate. Stock. Okay, dividend stock's going to take a lot to get there, so you got to like have a plan to put money in. Like I said, 6% a year IBM is giving. How much money did you have to give IBM to get 6%? I believe it's over 100K. Okay. Crypto. I want to be able to borrow 20K off myself every year and not worry about liquidation, because if you borrow money and the asset class goes down, they take your crypto. So 20K safely means you probably have to have 100K in crypto. So now we're talking about 100K in stock, 100K in crypto, 100K in real estate gets you closer there. But that's a lot. Not a lot of people could just spend 300K, right? It takes time to build that up. But if you have the plan and you have the strategy to grow it, and slowly when you get paid, put money away to invest, you could get there, right? Then so there's real estate, stock, crypto, investing in early stage startups. So I showed you that with equity crowdfunding. I created a video a few weeks, like last week, I think, that shows you equity crowdfunding, because equity crowdfunding is like a venture capitalist. Venture capitalists basically put money into a company, and then on average, they got to wait 7 to 10 years to reap the reward of that investment. But very risky, right? So if you let's say you put $1,000 into a company, 7 to 10 years, if you did well, you can make 20, 40, 100, 1,000 times whatever you put in. Let's say take the lowest number, put 1,000 today, in 7 to 10 years, it brings you back 20K. That's awesome. But most times you lose. And this is why venture capitalists, they invest in a lot of things. They invest in, let's say, 10 companies. So this way, one of the 10 will return, maybe 2 of the 10 will return, the other ones will fail, but those 2 will pay way more than they put in overall. So again, let's do the math. They put in 1,000 into 10 companies, that's 10K. Let's say one of those companies, 20Xs, they made 20K just off one company. They lost all the other ones. 9 out of the 10 fail. That one company that did well gave them their 20K, and that's 2 times more than they put in initially, right? So I've been studying that game. I've been looking at venture capitalists that put way more than $1,000 into companies. 10,000, 25,000, 50,000, 250,000 into each company. Think about that. If you 40x, 100x, and this happens every now and then. You saw Nas investing in Coinbase early. Probably at least 40x'd his money. And again, the company Nas has that invest in startups is not writing $1,000 checks. They're probably writing $250,000 checks. So imagine 100xing on $250,000. You do that math. I used to play that game as well. Which game? The equity crowdfunding game? Or unless you're talking about something else, Scarlett. All right. So that's another thing that now we all can do for $100 at a time, right? I showed you guys websites where you can put $100 on a startup. Again, not millions of dollars. If you put $100 on 10 startups, that's $1,000. If one of those startups, 10x's, 5x's, whatever it is, it's better than having the money in a bank. Of course, you get really lucky and won 1,000 X's. Now you're in a good position. Again, this is risky. Adventure capitalists. All right, I never even heard about that game. I gotta check that game out. So that's another asset class that you can do right now. Equity crowdfunding, early investing in companies with the bigger upside, right? Because when you invest in stock, the company has already exited to the stock market, so you're not going to get as huge a return. You're not going to 40x unless you luckily invest in something like Amazon 20 years ago, right? But if you put money into a company, right now you can invest in cannabis companies, AI companies, games, all kind of stuff, real estate through equity crowdfunding, right? So what's the site for investing in startups? All right, so there's a few sites. There's the popular ones are like Republic, True Crowd, WeFunder, Start Engine. Those are the ones I can think of off the top of my head. There's another one, Net Capital. So those you put $100 at a time in different companies, and now you're a venture capitalist, because if any of those companies do well, you make 10, 20, 30, 50, 100x on your money. That's what venture capitalists do. And then entrepreneurship. To me, that's the best asset class to invest in, because you're investing in yourself. You're investing in your own time freedom, right? So to me, one of the worst things that could ever happen to me is where I have a job that I hate. I never want to be in a position where I hate my job. Why is that? Most people spend most of their life working. So, but 10-year wait. Yeah, I mean, this is a thing, right? 10-year wait on the venture capital. So Stone is saying you got to wait 10 years. Yes, that's the gamble, right? In a way, there's always a gamble with any asset class. With real estate, I just told you the gamble. I could have been totally wrong about people willing to travel to that location. So that was a gamble, right? If nobody ended up wanting to go there, I still have a beachfront property, not bad, but I wouldn't be making money from it. It would just be an asset that grows very slowly in value every year. I really invested in that because I knew people would go there and I could put it on Airbnb and make money every month. I invest in innovation. Airbnb is an innovation. I could have just invested in a real estate, residential property somewhere where I could buy a home for $100,000, rent it to somebody, and just get a smaller income every month, right? If you can do, your family keep it. If you do, can your family keep it? Yeah. Venture capitalist. Yeah. So if Stone is asking, if you invest in venture capital, can your family keep it after 10 years, right? So if like something happens to you in 10 years, what happens to your investments? You can give your investments to your family. Yeah. If you die, all your investments, but of course you need to have a will, right? You have to have a will that says this goes to these people. So that you got to set up. We're young enough where probably not thinking about that, but we are getting to the age where you just never know. And look at COVID. People dying. I heard a young person died last week from COVID. Again, not vaccinated. So it depends on your situation, but getting a will where you say, here's my investments, here's how to get to them. If I die, here's who gets what, is definitely worth doing. I got to start looking into that myself. I'm not set up for that either, but you can pass all your investments to your kids, family, wife, whatever it is. So again, entrepreneurship gives you the time, flexibility, and enjoyability, right? So to me, I love what I do. So it doesn't feel like work, right? I'm not going to work somewhere that I hate. I don't care how much they pay me. I've literally had offers to pay me ungodly amount of money, and I'm like, I'm going to hate that job. 0% chance I'm doing that, because it's just your life, right? Like if you're going to spend 10 years of your life doing something you hate, 20 years of your life, 30 years of your life. That's a big chunk of your life to retire, then enjoy your life. That's not what I'm doing. I'd rather spend that time trying to figure out how the things I enjoy can pay my bills. That's the hardest thing to do by far, though. But what's better to work on than that? In my opinion, nothing. You know, we only get one life, we think. Might as well try to enjoy the thing you do that pays your bills. I believe there's nothing worth working harder for than that. So that's what I work on every day. And not just with my own company. I work with other people. I work on multiple companies because who knows? And every company I work on, I'm going to enjoy what I do for that company, right? If one company takes off and it's really doing well and I could just work on that and plus make videos every day, I will do that. All right. How young people, college students invest? Is there a difference or no? It depends on your situation, right? Like with me, I honestly wish I knew what I know right now when I was in college because I spent so much money dumb. It's not even funny. You my mentor. Thank you. I don't know, Casey. I don't know what that is. Investments help to buy time. This is actually another good point. Right now, you guys both made the comment on different platforms that connect. IG, YouTube connection right now. If you invest now, remember what I just told you. My goal is to have my investments cover my life expenses every year. Right now, if you put money in right now, that investment is going to grow. When you get to my age, which is 20 years, I was 20 years ago when I was in college, probably a little more. Those investments will be worth a lot more money. And now, when you're my age, you have less work to do to get to the point where your investments cash flow your life, right? So the earlier you start, the better, right? Of course, but you could start late too. People are living to 100, no problem now. So I'm 42. I still have 60 years to get to 100. If I live to 100, I will now, right now, still live more years than I have to this day. So even if I start right now, you're good. If you're starting 40s, 50s, still good. Starting 20s, here's what they say. If you invest in something like VOO, VTI, SPY in the stock market, they say on average, historically, your money would double every 10 years. It's called compound interest. So imagine at 20, investing 10K. Let's say this year, Jocelyn, you have taken your Metabronx money, you've taken the any other job, and you put 10K into the stock market. Let's just say safe stock market. In 10 years, you will have 20K, right? 10 more years, you will have 40K. 10 more years, you will have 80K, right? But if you do that over time, I know people that have built $500,000, $600,000, $700,000 stock retirement plans from just their job, giving them 401ks, right? You are still in college. If you're putting money into investments right now, crypto, I believe crypto in 20 years, we're going to laugh at all these numbers. We're going to be looking at Bitcoin and saying, wow, remember when Bitcoin was 30K and now it's $1 million a coin? I honestly believe that, right? So for you, depends on how much money you make. I know Metabronx is paying you this summer though. So don't use all that money on fun stuff. Take some of that money, figure out your own personal investment strategy, right? Like if you want, was it you that liked the real estate stuff? I think it was you that wanted to get into real estate, Airbnb actually, right? If it is you, start putting your Airbnb property fund together. And this is a side bonus. This is why you got to know all these asset classes. If you take that money and instead of just holding it in a bank, you put it on Aave with the higher percent interest, you will have more money than just keeping it in a bank. So now, over time, you're investing it, you're saving, Your money's growing, and now you can invest in something, right? So that's on the real estate. But I honestly think everybody should try to invest in all asset classes because you just never know what's going to go up and down. I heard one guy say you never want to have any of your asset classes. Actually, it was Mr. Wonderful, billionaire. He said you never want to have any of your asset classes represent more than 20% of your total assets. And cash is an asset. He said cash should be 20% of your assets, right? So let's say you have $100,000. That means 20K should be in cash, not in a bank, probably in a crypto bank. 20K should be in crypto. 20K should be in stock. 20K should be in real estate, right? Again, how you get there, it takes time. Nobody's just doing this overnight. But over time, you're doing little things right all the time. You will get to a point where your numbers look amazing. And I know a bunch of people that has happened to. People that have invested in just one asset class, people that have invested in real estate or invested in entrepreneurship, right? And then that entrepreneurship journey reap the reward that they were able to invest in real estate and other things. One asset class is really hard to do it, but you can have a job, invest in stock and real estate. Over time, you'll be all right. You can have a job, invest in crypto and real estate. You could have a job, invest in all of them, right? I think right now what we're looking at is a possible shutdown again. So I would be accumulating cash, and any money you make. Another big lesson I wish I learned earlier. Any money you make, you invest first, then you spend. Right? So when you grow up in the hood, like I did, and most of you guys probably watching, you get money, you spend it, sneakers, dates, whatever it is. Then you say, all right, now how am I going to pay my bills? Invest. What rich people do is they get paid, they say this amount of money, no matter what, is going into some investment. Then they figure out how to pay their bills. Then they figure out how to have fun. If we as minorities that weren't taught this start to do this, our purchasing power is massive. But what we use it for right now is things that don't grow our wealth. We use it on things that actually take away our wealth, right? If I take the $100 and buy Jordans instead of putting it in stock, crypto, real estate, those Jordans next year are worth nothing. That real estate, stock, or crypto is worth more, right? So the more you do that over and over and over again, and I have friends that have watched this, and we grew up together. So we both did this. We bought stupid things. And now they've switched the way they think. And when they go to buy something, they're like, should I buy these Yeezys or should I put this money in Bitcoin? And then you think about, all right, in 10 years, this Bitcoin could be worth $50,000. These Yeezys, will I even know where they are anymore? Right? Like, and that is how, if you start to think like that, every time you're about to spend money, what am I spending? If it's to eat, you got to eat. But if you're going to spend money on something, you're like, is it better to spend this money on this or look at my future and what that money would have been if I didn't spend it and I invested it? That's a powerful way to think. Give away wealth to look good. Somebody on my YouTube. Thank you, Consumer Cooperative Group. Thank you. That's exactly right. I'm going to put that up on the YouTube. Consumer Cooperative Group. Give away wealth to look good. That's what we end up doing, man. Like it sucks because we're not taught this. And you know, we're taught the opposite. We have to, I think, and I don't want to get on a soapbox, but I think coming from where we come from, part of what we do is the only way to feel valuable is to have things that look like we're valuable, right? So you buy the Benz, you buy the Jordans. So when you're walking around, people look at you and say, whoa, that person has money, versus actually having money, right? Because if that person has the Jordans, the Benz, but they're going to live with their mom and they got $10 in the bank. Are they really? Right? Like, we think material things are wealth. Yeah, man, exactly. Instead of buying Nike shoes, buy Nike stock. Yeah, I put up a post actually about that on Instagram, where if you bought Nike stock for like 5 years instead of Nikes, how much money the difference would be? It's ridiculous. Like, and I think we're just put in this like vicious cycle of wanting to make other people view us as valuable instead of actually being valuable, right? Like having assets that are of value, having skills that are of value, right? Like just putting on Jordans and hoping somebody looks at you and says, wow, that person must have money because they could afford those Jordans or that chain or that jacket that costs $1 million, whatever, you know what I mean? So at the end of the day, this is super important. And right now, there's a lot of people getting unemployment, getting jobs. I got somebody on the on the Clubhouse. If you want to talk, Milan. Oh, Milan, what's up? The idea is right now, accumulate assets. The assets have never been cheaper, except real estate. Real estate is actually higher. Crypto's down, stocks are down, real estate is up, but real estate goes up. Actually, I just saw something. Jay-Z and Will Smith are partnering on a startup that will allow people to rent to own homes. Think about that startup, right? So what is that? What does that mean? Basically a lending platform. So if I'm renting right now, let's say I'm paying $2,000 a month rent. To buy that house that you're living in, though, if you put 20% down, you could be paying $1,700 mortgage. But because you don't own it, you're paying $300 more. So, but what if that $300 more was going towards you buying the house? Will Smith and Jay-Z, they're investing in a startup that's doing that. Again, if that startup was equity crowdfunding, let that garbage truck pass. If that startup was equity crowdfunding, I would put $100 on that company because I want that company to work. You don't only invest in things that you think are going to 10, 100x. You invest in things that you want to work, right? Because that idea, if that works, a lot of people like me and like where I come from will be in a position to buy homes when they wouldn't in other ways, right? So if that startup works, cool. So I'm going to put $100 because if it works or not, I want to try to help it work. All right. We should be looking into pre-IPOs and buy blocks of stock in that company, then help get it listed on NYC. Yes. Paying pennies on the dollar versus waiting for you to build. Yes. So what he's saying right now is exactly what I've been saying about equity crowdfunding. Thanks again, Consumer Cooperative. And Claude, what up? Facts, 100%. Thank you. What he's saying is exactly what I was saying about equity crowdfunding. Imagine if we took a startup like that and we said, look, we're going to make sure that that thing goes IPO. So as a community, just like they're doing with AMC, just like they're doing with GameStop, we say we're not going to let this company fail. This company needs $5 million to get to the next round. $5 million divided by 1,000 people is $500. Think about that, right? So, okay, let's go to 100,000 people, $50, right? $5, right? So if we all said that company we want it to work and we're going to own it by investing in it early and we're going to use it. Now you win in every way. That's never been possible before. Never, right? Where you can invest in the company, use it, and make money off of it. Because that was only left to rich people in the past, where you had to be an accredited investor to even be in that game. Anybody in Clubhouse that wants to say anything, introduce themselves, you could do that. Anybody with more questions anywhere, also do that. What are IPOs? Good question. So we got young people in the audience. We got people who are seasoned. So IPO is short for initial public offering. That means when it first becomes available on the stock market. So let's look at Coinbase, which IPO'd last year. Coinbase, people like Nas and a few NBA players were able to invest in Coinbase when it was worth, I think, $10 million. So think about that. It was worth $10 million. When it hit IPO, it was worth $500 billion. Think about that. No, 500 million, not billion. Yeah, 500 billion, right? I believe it was worth 500 billion. So think about if you invested in it when it was 10 million and it went to 500 billion. How many X's are that, right? So if you look and you say, what are the ideas that as a community you want to work, and that whole community invest in those ideas and make sure that they're using them, because that's another big thing, right? Like I've seen companies raise millions of dollars just because they have a certain amount of users in the app, right? So think about what I'm saying here. I'm from the Bronx. The Bronx has 1.4 million people. And I've literally seen a company raise $1 million because they had 10,000 people in the app. Talking about 1.4 million people just in the Bronx. Brooklyn is bigger. Queens is bigger. Manhattan overall. And I'm just talking about New York. What if we all did this around the planet for ideas that will help people around the planet? And that's what I think crypto is starting to get to too. But there's all these different asset classes. We can do this for real estate, right? One of my ideas, the leisure fund, go to leisureFund.com, is having minorities buy back where they come from Puerto Rico. I personally could not afford to buy beachfront property in Puerto Rico by myself right now. But what if a bunch of Puerto Ricans got together and did it? Then it becomes a lot more possible, right? Even if it's $1 million, $10 million, there's 4 million people, Puerto Ricans in New York alone, right? Like, oh wait, is that America? I'm not sure. Again, though, 4 million people. We each gotta get. If we each give $5, it's $20 million that we could buy back land on our island. Now, imagine doing that at scale with multiple nationalities, countries, right? I really hope, and I know it's not just going to be me that builds that. There's going to be a bunch of people doing that, but I hope that really works out. My bad, Miguel. I did not mean to be plugging my pre-IPO. Go ahead, plug it. Which one? So Consumer Cooperative Group. Let's look it up. We're gonna put you on the spot. What's the website? Put it there. I don't mind plugging. I plug all the time. Let's do it, San Juan. Here we come. Stone, you exactly. I was just talking to somebody day before yesterday. Thank you, man. Dope Live, he said on IG. I was talking to someone yesterday, one of my mentors. He said he saw a property in Old San Juan, 12 rooms, probably could buy it for $1 million. Again, can't do that by myself right now. But the idea is eventually, right, you can equity crowdfund something like that. So if there's pre-IPO, I mean Consumer Cooperative Group, if you want to put the URL, you can put it in the comments. I've been on for an hour, 15 minutes. I think it's a good place to end it unless there's more questions. I'm willing to stick around for questions. Vivica on the Clubhouse, if you want to introduce yourself and ask any questions, I'm with it. If not, I'll end it here. I think it was a good live. People ask questions. I think, again, if we recap, try to figure out how to have as much cash on hand as possible to take advantage of possible downturns. I think crypto is going to go down a little bit. Right now, we're at a high. If you look at the history, always goes up and down. Be ready for that. Right now, the stock market is already down. You may be able to buy in now and it comes up, or wait, it might go down even more. There are people that think there's a recession coming. Again, you have to predict what you believe is going to happen. Connect that with your personal finance, long-term roadmap, and do what you do. What I'm doing right now is I'm waiting for crypto to drop. I'm more investing in stock that I have a chance at that company doing well. I'm not just buying Tesla and hoping Elon Musk does well. I'm working in companies where I own stock and I grow the stock. Real estate, like I said, I'm planning on making my Airbnb better so it's more valuable. I'm also planning on launching a project where we could all invest
in real estate, working on that, and yeah, slowly but surely getting to my goal of my assets covering my lifestyle. And then also lowering my cost of lifestyle, right? Right now I got 3 young boys, so my cost is pretty high. Eventually they will go off to college, hopefully work with me on doing what they love, and my cost should come down, right? And then hopefully all this time have built up enough to just live a life that I want to live, wherever I want to live, however I want to live. So I believe we all should be working towards that. And hopefully watching this has helped you in some way get there. Again, slowly. Stone, hit me up. I still got to set your wallet up. I want to make sure you're an Ave, Stone, no matter what. Hit me up. Cracking Crypto Club tomorrow, if you're on it, 7 o'clock, we're going to be live. I'm going to show you guys some yield farming stuff. And thank you for anybody who came and watched this live. Have a good rest of your day. Innovate every day. Invest every day. Thank you.